Hey everyone, welcome to another episode. My name's Dom Warnaar. Today we're going to talk about what is the difference between gross profit and net profit. Now, you might be just getting started in business and you need to know some accounting terms, or maybe you're just getting started in investing and you're reading some quarterly or annual earnings reports and you've come across these terms. So really simply put, gross profit is the profit a company makes after deducting the costs associated with making that product or making that service possible. So basically, to determine this, all we need to do is subtract the cost of goods sold from the revenue. So basically, you might see cost of goods sold as written down as COGS in an earnings report, and then revenue can also be listed as sales. Now, net profit is a little bit more in depth. Net profit includes the costs and the expenses that the company incurred, which are subtracted from the revenue. So that includes things like marketing, advertising, might even include research and development. After all expenses and costs have been deducted from the total revenue, a company's net income represents its overall profitability. So you might see this written as profit or income, depending on the company and how they want to basically show these earnings. A company's net income, also includes other types of income it receives. So basically, that could be interest. If they're holding a lot of money in a bank account, there could be interest from that, or it could be revenue from the sale of an asset. So say, for example, if a big company owned a large office building and they sold that real estate, that would also be reflected in that. The phrase "a company posted top line or bottom line growth" is often heard by investors. Basically what it is top line growth refers to an increase in revenue, since the revenue is the first line of an income statement. Now, growing net income is also known as bottom line growth, since the net income is listed at the bottom of an income statement, right? So positive quarterly growth does not necessarily mean a company is profitable. Now, if a company is buried under too much debt, it will incur high interest expenses, resulting in a net loss or negative net profit. The net income of a company can also be positive, while the gross profit can be negative. Gross profit may be reported as a loss if a company experiences poor sales and revenue performance. The cash received from the sale of an asset or a product line, however, may be enough to offset this loss, resulting in a profit for that quarter. So it's important that you understand not only net profit, gross profit, and net profit, but also understanding the parallels between them and how those numbers actually came to be as well. So I hope you enjoyed this video, guys. I know it was short and sweet, but I hope I provided you with some value, and dive into the rationale behind what increases your own insight into business, life, and investments. Don't forget to subscribe if you do like content like this, and I'll catch you next time.